Morning, everybody. It is February 27th, 8:25 a.m. This market's been very interesting. A lot of economic weakness, a lot of fundamentally bad stuff happening to the market. Um, Tried to hold those highs, but we fell apart, right? So we're at a crucial part in the market. Let's look at the watch list just to see what's going on here. We got Bitcoin We got Bitcoin at up 1.2%, Nasdaq up 0.69, the Russell up 0.63, ES up 0.57, the Dow's up 0.5. We got the 10-year yield basically up slightly, dollars down slightly, crude's down 0.25. Bank of America downgraded oil, so that's probably why that's a little like that, and the VIX is down 0.65. All right, let's get into leaders and laggers. We got Tesla is up 2.49%. Um, I saw that they made their orders in Germany, I believe it was. Uh, I saw something about Germany, but needless to say, they're up. Also, Li Auto, a Beijing electric vehicle company, came out with very good earnings, which is boosting sympathy plays like Neo, Xpeng. Um, there's one I'm missing, but that's what's going on in the EV world in China. All right, Bob is up 1.92%, Coins up 1.9%, Nvidia up 1.35, and a bunch up over 1%. Netflix, Snow, AMD. Okay, is there a lagger to speak of? There is none. Let's go to leaders in the top sector stocks. We got Roblox up 0.92, nothing to really speak of to mention in those sectors. Let's just see discretionary is up 0.64, financials up 0.61. I mean, technology up 0.61. XLY is Tesla. And any laggards? No laggards to speak of. All right. Let's get into just what's going to go on with this week before we move on to any charts. Let's look at any economic releases this week. We got core durable goods coming out in 2 minutes. Durable goods coming out. Usually not that much of a market mover. We have pending home sales at 10 a.m. And tomorrow, let's see, anything to retail inventories X auto. We have Chicago PMI. Um, let's see, Wednesday, ISM manufacturing employment, ISM manufacturing PMI. Thursday, initial job claims. And we got some Fed speak. Fed Waller speaking on Thursday. What else? On Friday, we have services PMI and ISM non-manufacturing employment, ISM non-manufacturing PMI. Then we have more Fed speak. A lot of Fed speak. Kind of a lighter news this week. All right. But we do have some earnings this week to look at. I thought this was a pretty cool chart. This is by implied movement. These are earnings with the implied movement. So the higher up on the scale, they're expecting a larger move from earnings. Okay, so today we have Target. Tomorrow, the larger moves are expected by AMC and Zoom. Okay, which you also have Oxy, HP, AutoZone. On Wednesday, we have OKTA. We have Neo. Neo already moving because of the Li Auto. We have Snow, right? But looking like the top of the list is AMC tomorrow. That should get a big move. What else we got? We got Marvel, Dell, Costco, and Hormel, and TD Ameritrade on Thursday. But the biggest movers this week that their implied volatility is Zoom and AMC. All right, so that's what we have this week for earnings. Um, let's get into the charts. All right, So what did the SPY do? Right now, Friday came down to the 200-day moving average. Okay, almost to the anchored VWAP of the lows. In futures, it's a little different with the moving averages, so we can go over that in a little bit. We basically almost touched down to the 200-day moving average. Found resistance at the 50. Also, the backside of this uptrend line. You can see that was found resistance right there, which is also the lows of the previous 2 days. Okay, so that's really what's going on there. Let's look at the Qs. So in the Qs, we bounced off the 200-day moving average. We actually touched it, had a doji candle, and also went to the lows of the previous 2 days and this big level of 293.47. Okay, so we're in this decision land here, holding the 200-day moving average. Now we actually went past the 100-day moving average in the futures. That's in the futures. That's what kind of was supportive in the futures. Let's look at now. Remember when I was talking about really quickly about the monthly charts, the weekly charts, when you have big wicks, and check out. Well, one, you can see the weeklies basically got very selling excess on each of these weeks, and then finally we made a move down, right? But then if you go to the monthlies, this month pretty nice wick above us, right? Qs is a little more pronounced, I believe. Yeah, look at that inverted hammer. So that just wham. So usually when you get a wick like that, you expect movement, default continuation lower. Doesn't always happen, but usually that's what you want to expect. All right. So let's go into this TNX triple-headed monster. We always look at. The bonds told us basically they expected to move lower by moving higher. We're now hovering above the 3.9% yield. Break out of this range, we probably should get lower prices in equities. And let's look at that. Let's look at the VIX. Now the VIX obviously here made a high this day of 23.63. Since then we kind of came off it, made a little spike on Thursday, then on Friday kind of went down with the end of the day push from the lows. So right now we're at about 21.48. So any move above 22, should be cause more volatility, maybe more downside. And the dollar actually hit 105.32 on Friday. We hit it again today. We kind of taken slightly down a little bit, but this is again not good for equities, not good for commodities. So if we break this 105.32, got the 200-day moving average above us. So keeping an eye on that, but definitely trending higher, right? Nice little trend line going here. Okay. Let's get into some market profile. Give me 1 second here. While I switch it up, I'll give you the watch list. Morning, Chief. Alright, let's go here. We'll go over what we did on Friday. Alright, so let's look at what we did on Friday. We tried to make lows, right? We were trying to hammer out these lows here. We split out the session, right? We came down, went up, came back down, up, tried to make another low, tried to make one more attempt, Came all the way up, came all the way back down, right? Crazy little movements here. But in the futures market, see, we're below the 200-day moving average. And this right here is the 100-day moving average. So we bounced off that and demand. So no surprise there. We've kind of fallen pretty far, and I'm speaking about that last week, that there's a lot of support in here. This is a lot of moving averages converging, and it's going to be hard to just punch through all this, and that's where you get shorts, 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 and then eventually the shorts have to cover, right? It doesn't mean we're going in an uptrend. It just means that that's how it works, right? Shorts are just trying to push lower, and it's really not a good place to be short. You're kind of shorting in the hole. So we opened here, and then we filled the gap, and obviously we pushed into the range. So in futures, a little different, okay? Because you got the most traded price of the rolling year here. You got a 200-day moving average here, and you got a 100-day moving average here. So in the futures, you went all through all of them, and then hit this the demand zone, and then the 100-day moving average is being support. But then you just got all of these moving, and the 50-day moving average here. Most traded price of the week. What do we got? 4,010. And then what's this? The most traded price of this year. So there's just so many levels above us. Okay. Where I think that this area is just going to be a chop zone. I'll talk about that a little bit further. Let's go on what we're looking at now and what's happening now in the market. All right, so it looks like the market's getting a little push. Now let's just see if there any news that would have pumped the market up. So let's see, Coral Doable Good Orders forecast 1.1.7. So that's a pretty large number than they expected. Durable Good Orders month over month forecasted -4. They got -4.5. So I guess the market liked that. Let's go back over here. Oh. All right. Let's look at this. Let's read this market. All right. So we're coming off these lows. No surprise here. All right. So let's mark off our lows. We got the low Friday, the high. All right. So right now we're gapping up right around 4,006, which 4,010 is the most traded price of the week. Okay. So currently in the futures, this is what I'm saying. There's a 100-day moving average, 100-day moving average, most traded price of the rolling year, and now we're at the most traded price of the week and the most traded price of the rolling year. So just a lot of levels, right? So again, high and the low, we're gapping up. So there's been a lot of gap up and gap downs lately. All right. So how do we gauge this? All right, and you can see that this move, right, kind of in here, right? This is what the market's been doing, making lower lows and lower highs. However, you have these two big days here with thinner volume, okay? And just notice when I talk about this, this isn't overnight, but this still valid because there's not a lot of volume here. This is from the PPE before the PPE came out and it dropped, right? Also here, not a lot of volume in these moves. So no surprise that we're starting to eat that up here. And why, when you do that, okay, and let me explain the profile, and this is like one thing about the profile, right? So here's our composite profile here. Okay, the most traded price was still up here. So how you look at this is this: if the market cannot establish new value and bring the most traded price of the week lower, you know what the price does? It goes back to old value. It reverts back. If you can't if you can't bring this most traded price of the week lower, it will revert back to the last value. That's what always happens. Couldn't move it down here. Tried. See, you see the volume out here? It tried, but it's now moving back, right? So now all these levels that I just talked about, this is why I believe if we come back here, we're going to chop in this area until the market decides where it wants to go. All right, we test it lower. Market said it couldn't go that low right now, so now it's going back to the most fairest price of the last week. It's not a big surprise. Okay, so what are we looking for today? It's always about the gap fill. All right, always about that gap fill, and it's going to tell us the strength of this market. So have a pretty large gap right now. Nasdaq's up 1% right now. ES is about 0.82 as we're speaking. Okay, this is not a shock as far as the volume here in these two areas. They're just literally getting swept up here. There's probably some short covering happening. So again, I feel like there's a lot of gaps I've been talking about lately. So, but this is how you have to treat them. How you gonna gauge it? Okay, let's go with the strength. Let's go with strength. So if there's strength, you're gonna get a gap and a go. Now remember, you have the most traded price of the year and week right here, and a supply zone. So do I think this gets ripped? No. But let's just go with how we would gauge it, right? So it's a gap and a go, bullish, right? Let's go with the bullish scenarios. It could be a failure to fill the gap. Now this is the 50-day moving average. I can see it's pulling back to here and then going. That's still strength. Okay. We could also come down and fill the gap. See, there's a demand zone here. We could also fill that gap and also bounce off. Okay, there's the strength. Now, we always got to talk about, well, what if these buyers are not that strong, right? Well, that could also mean we open, we come down, we fill that gap, try to go higher, we start moving back into Friday's range. And then you would know, okay, these buyers don't have a lot of strength. Now, we're going to talk about a trade off the open now that I've been keep talking about because it keeps happening with these gaps. Okay, so let's look into that. Let's look at our first possible scenario. So here what do we have here? Okay, this is very important, and this is why I love looking at the market profile with the overnight sessions. Right, you don't see this in candlesticks. You don't see it. Okay, what do we have here? This is a kind of a nice setup here. So we closed here. Let's check this out. The whole night is long. The whole overnight is long. So if you've been watching every day, this is considered 100% net long. Everybody from the settlement to close of Friday is long, especially the overnight, and overnight hands are weaker hands. Okay, so whenever you have this, and this is a perfect setup if it stays here, it really is. Okay, This is what we want to see. So now that we know everybody is long right now overnight, profile's getting thinner up here. Okay. This is setting up for a nice fade. And what do we have above us? We have our good levels here that can cause resistance. We have supply zone. We have the most traded price of this year and this week. Perfect, perfect resistance. Okay. Now, I don't love the 50-day moving average being here, but off the open is very powerful, so it can ignore certain levels like that because it's off the open. It's very volatile. So, in the perfect world, I would love us to open up, come into here, the supply zone, to this area, try to get through it. Now, say this is the open, right? Come through the open. You short it. Stop here. Okay? And you're going to want to target. Now, if you want to take your first target, you could take it over the most traded price of the overnight here. That's about 39.93. Okay, if you want to be a little bolder, you go for the gap fill. Right here, 39.84 will be your first target. It's also a demand zone. I would expect a pop here. That's just a nuanced place. That's the gap fill. That's the high of Friday. That is going to be taking profit, and people will be getting long there. So for me, I wouldn't keep a runner on. That's just me because this is like this demand zone with the 100-day moving average here, 200-day moving average here. I'd want to probably be out. But that is setting up very, very nicely. Okay. Now, if you want to talk about a long, now for a long scenario, I just basically laid one out. But let's just see. Now this comes off. Let's say we get that. We say everybody takes profit. Market comes back to obviously the gap and this demand zone, which is also just confluence, right? Perfect. Demand zone right into the gap. Let's see if we try to get lower under the 200-day moving average, pop above it, you get long. What do you target? You target the most traded price of the week and the overnight high, 4,009 right here. If then this is the other part, right? This is a lot to get through, supply zone and all the levels we talked about. So this could just be take your profit here, hold the runner if you want. I don't know if we do that. I would say the probability is not in our favor for that. Okay, I don't think that's in our favor. But that's what I'm seeing, and it's a very nice setup. Okay, obviously you got to break under this 200-day moving average, and you know the short is here. So let's say you're patient, you're very patient, you don't want to do the fade off the open, and you want to look for this move. Well, let's say, like I said, this happens, we come back down. Now remember, gauge it. If we fill the gap and bounce is a long, right? But if we fill the gap, start to come into range, break through this demand zone, pop back up to the 200-day, you could short here, target the most traded price, 39.65, and then go down. There's a demand zone here, so I would take profit here. That's if you're very patient. You don't want to do the fade off the open, but we break and hold under the 200-day moving average, break this demand zone. Remember, and this is looks like a prominent POC too. So I explained that before. It just means that a lot of trades went through this area on that day, and I can show you that. Let's see here if I can show you that POC. See this wide? It's very wide. You can see this is the Friday's session here. See that POC? It's pretty wide. A lot of price went through here, so we could definitely tag this. It's a magnet. Okay. So that's what we're looking at. All right. I really like those setups. And sometimes you just don't have setups like that look like that. But this is pretty nice. This is pretty nice. You can see that the volume's very thin up here. And then they're going to hit this supply zone. Oh, it's very nice. I hope this stays this way. It needs to stay this way. All right. Let's move over to the NASDAQ. All right. NASDAQ has also a very prominent POC as well down here. Dipped into this demand zone here and bounced. Okay. On Friday. Below the 200-day moving average in futures. Okay. But now let's look at what we're doing now. It's obviously the stronger. Okay. So let's move this up. Let's start constructing here of what you see. And I'm going to assume we're going to see something very similar, right? Now, you can already see one thing, that the NASDAQ is stronger. Okay, now, what did they do? The NASDAQ just broke the most traded price of the week, which is 121, 12,100. So that's bullish. You got the 200-day moving average here. It's above that. So now that's a little bit of a disconnect, right? This now makes me hesitant of the short of the ES because this strength and it's above this key level. Okay, so we have a gap again. But we're going into this mess. There's a lot of price. There's a lot of volume right in here. Like I said, the chop zone. We'll get into that in a second. So the trades are still valid, what I said in the ES, but this makes me hesitant because this strength in the NASDAQ. Now we do have a supply zone here and here. So if let's say the NASDAQ whips up to here in the supply zone and then ES is in the supply zone, then I'm more comfortable taking that fade off the open. I'm more comfortable. But if this NASDAQ just blows through this supply zone and comes into here, well then again, if this ES is still in supply, then I'll be more confident to take that. But see, this is pushing as we're speaking. Let's see what the ES is doing, just curiosity with that push. All right, see, ES is now in the most of the most traded price of this year, and we're gonna about to hit the supply zone. Now, if we rip the supply zone, then that trade is not as valid as what I just said. Okay, we're starting to push. Okay, so let's go back to the NASDAQ. All right, so in the NASDAQ, you got our supply zones here. I would not probably wait for this one. I'd more or less want to wait for this one if you're going to short. But there's some strength there. But there's a lot of overhead supply here. So I think people are going to look to short bounces here. So again, let's just go over it real quick. The gap fill. Large gap. Large gaps are very hard to read. There's our high. That would be the gap fill. So again, we got to look for if it's a gap and go. All the stuff I said before. I don't have to repeat myself. And still 100% net long pretty much from the settlement. Okay. And this is known as a weak low now, the overnight low. That gets taken out, I think we go down here. But that's beside the point. Okay. So if we continue, see, when we're starting to come off the lows a little bit, but if we stay up here, still that fade is in play. I don't like that this is here though. That could be very much supportive. You don't usually whip through most traded price of the week in the overnight, okay, but you usually don't do that when like the market opens. Now in the first 5 minutes you can because the market's so volatile, but so this trade is not a clean in the Nasdaq. I have to be honest with you. Got a lot of strength. I don't think I'd really want to fade that too much. And you have this level here, so you see this is making me hesitant. So the play for me today would more or less be go into this, not this supply as much, this one, because you got this double top here that should be resistant. Okay, that's what I would really kind of look at, and then you see if the ES gets weak with this, and then I would definitely think you would want to go back and short and target this level here, this 121. That'd be your first target, or the developing VPOC of the day. Okay, this is makes sense, right? Like I said, these 2 days of large moves, large selling down, we're starting to clean some of this stuff up, which is fine. It's normal. Okay. Now, lastly, I'm going to go to an hourly chart just to show you some things that I wanted to show. Um, just in the ES, we'll just go over really quickly. What I'm seeing here. All right, so just real quickly, okay. so so this is pretty significant move here off the lows, okay, and there's a trend line that it's breaking right now, and you can see here the most traded price right here, 40.15 is the most traded price of this year. 3990 is the most traded price of the rolling year. So this is why I was talking about the chop. Okay, I believe this to be resistance today, and so really, what I would say, if there's a change in tone, okay, so look, from this move, did a Fibonacci here, from this move down to here, anytime you go past 61.8 Fibonacci, that usually means that this move is going to be canceled out. But it has to close there. Okay, so already retraced 50% of this move, which is nuts because this happened on Friday, this low, and now it's Monday and we're all the way up here. Now you can see we're getting some selling, which I would expect. Okay, so this is where the chop zone should happen, because you have the most traded prices of the year, the week, and of the rolling year, right? All together, they're all clumped together. You can see them clearly, like I circled them here. That's why I think this zone is going to be a chop zone. People are going to get chopped up in here. Okay. Now, the Fibonacci alone, I'd be like, oh man, this is pretty bullish right now, right? But now I have these levels here, right? I have this level here with supply. I have this most traded price of the week and the most traded price of the rolling year here. So choppy, right? This just, and now people are going to want to sell bounces in this market because it's just the economic thing. So the key level here is 40.34. This double top, the swing high, if we take that out and we move up here and we take it out and we take out this swing high, then that's a change in tone. If we don't take this out and we come up to here, let's say, and we roll over, well, that's just another swing high put in. That would be then another lower high. Okay, that's the real move. That's the barometer I'm looking at. So I'm expecting, that's why I said with this gap up into these levels, I'm expecting profit taking and to get a little move back. And then, like I said, then we're in this mess. Okay. And you can clearly see, I could put it even on a larger chart, the amount of volume. And you'll see it on the right. once it loads. You'll see it on the right with these volume profiles, right? Because I can zoom it out to get it to show all this volume I'm talking about here. You can just see how much time has been spent here. I think it's the market's going to try to make its mind up here. Okay. I give you one more perspective on this, and then I'm going to go. Okay. So that's the fib. So that fib now, this morning I was like, it wasn't even that. It's kind of crazy. But we can go down in a little smaller front time frame here. Okay, so this is going to try to break this here. Like I said, I feel if people are really started to get excited when they see the gap up, get long, I believe me, shorts are waiting here to short this bounce. That's why I like that gap fade. Okay, but you can see just in here, let's take it from this move. I can put a volume profile just to see this move from here. And it'll give me a volume profile of the move. Okay, just look at the volume. All right, I just want to show you that because it kind of demonstrates it a little more than my composites over here. Look at this volume. This is why I'm telling you guys it's a chop zone. Look at the volume in this profile. See that? You see how much volume? Remember, volume profile is not like how much volume traded at this time. It's volume at price. So this price is just a chop zone. We're in a choppy area. That's how much volume is being put in here. I don't think we just go boop. So I hope this kind of states it a lot more, I believe, if everyone can see that. That's why I said most traded price of the week, most traded price of the year. Right in here, right in this volume, you can see it. Look at how much volume is all the way out here. I hope everybody sees that. And we have a very poor low here, if you can see the profile. There's no excess here. So just look at this move from all the way up here. You can see the volume, look. Right? And then we come down here, get a little less volume, and then look at this big volume node, high volume node. It's just monster. So hopefully that makes it more sense to you than just showing you this over here. This is showing you a lot of decision making here. It's a very crucial part of the market. Okay. So I'm hoping everybody really can see from this what I just put out there. Maybe it shows it a lot more. Okay. I'm going to keep that image there so everybody understands that there could be a choppy market this week, especially with not big news coming out. You have some earnings, but they're not big earnings movers. So, so just when you zoom out like this, I hope this paints the picture of why I said chop zone. Okay. You're welcome, Kobe. That to me shows everything right there. So I'm hoping these trades come in. And now, really quick, guys, just to come back in here, I can quickly show you this, just to show you we got some single prints now. Emotional buying, right? That I'm looking my chops at. Right here. We got our single prints. That's emotional buying, right? Right here. I'm hoping this price stays up here. We open, come into the supply zone, right? I'm hoping for it. And then we come right back through with volume. Take these guys out. Take these weak hands out. I'm hoping for it. I'm hoping for it. It looks nice. And we got it single prints in the NASDAQ too. But like I said, I need to see now Sometimes it doesn't give you this setup when the market opens. Sometimes it doesn't hold. Sometimes you're down here. We open down here. And then it's like, I want that toothpick holding up an elephant, all right? That's what I want. So, you know what I'm be looking at off the open. And it's not an easy trade. It's not easy. I need to see a lot of factors happen. There's a lot of volatility. So, um, that's it for me. Um, I'll try to do an update today if I see something that's worth noting. Um, Give me a comment, like, or subscribe. And hope you guys got something out of today. And stay green. I'm going to try to be green today. Come on. Everybody, let's get green today. All right. And hopefully, I talk to you guys again today. If not, I'll see you guys tomorrow. All right. Take it easy.